Is this the end of the bull market? Is Bitcoin heading down? Let's find out today. Hi everyone, this is Crypto Marshall. You might have seen a massive Bitcoin sellout last Sunday and yesterday. Some of you might see it as a perfect opportunity to fill up your existing portfolio or open new positions, or there might be some of you who thinks that crypto bull cycle is done and bears are coming in town. Considering that today Bitcoin owns 51% of the entire crypto market capitalization, I will focus on Bitcoin as the major driver of crypto market. I'll talk about technicals and fundamentals, bring some analogies to 2017, and talk about how this sellout is different to the ones we saw this year. Let's talk about fundamental analysis. Bitcoin is based on the fundamental principles of supply and demand, and therefore is very much driven by the agenda. The purpose behind each purchase, each sell, each hold. It's important to understand that it's not the technicals that drive the price up or down, it is the fundamental factors that affect supply and demand. One of them is scarcity of Bitcoin. Bitcoin emission is limited to 21 million coins by its nature, by its algorithm, which is already a solid factor to drive the price. It's limited. We currently have 18.6 million in circulation, and about 80% of which are sleeping, meaning they're stored on wallets for several years and not moving. So in fact, we got 2.4 million Bitcoins of potential emission in the future and 2.4 million to play with for active investors and traders out there now. Please remember that because we'll come back to it. How was the bull market of 2017 any different to the one that we have now? It was driven by retail investors. There were barely any institutional money there, well, at least that we know of. I know, there were definitely some institutional investors building up their crypto portfolios back then, but they weren't really exposed as such. The hype started building up in 2017 when regular people like me and you, also known as retail investors, started heavily investing in crypto. So let's break it down. Let's rewind to 2017. I've outlined the major fundamental factors affecting the price back then. 2017 for crypto actually started with Chinese government crackdown of major Chinese exchanges on suspicion of money laundering, market manipulation, and a whole bunch of other stuff. I know, right? It happened in January, as you can see. The price reacted to that because by limiting access to liquidity, you're limiting demand, and that's why we saw a sell-off right in the beginning of 2017. Followed then in March, we got Winklevoss brothers with their crypto ETF, exchange traded funds, that they have been developing for quite prolonged period of time. And there were a lot of anticipation about it, and because it would introduce crypto to a wide public of institutional investors. However, SEC decided to refuse the application, and as we can see, it caused another sell-off. Then it was quite huge win for crypto in April when Japan decided to legalize BTC as the mean of payment in Japan. The price started to soar due to mass adoption in public, and that happened, I think, on the 1st or 2nd of April of 2017. From May till September, we got a summer of crypto love. It was mainly driven by the boom in initial coin offerings, which is known as ICO, and the birth of new crypto projects. However, it's important to mention that during that time, we did have a Bitcoin fork anxiety. Due to scalability issues of Bitcoin, the facilitators could not agree on which resolution method would be better, and it was leading up to a BTC fork. On the 2nd of August, which would be around here, a Bitcoin Cash was born. It forked out of BTC, but it played out well in the end for Bitcoin. The prices started to going up regardless. People saw it as the true Bitcoin like it's supposed to be. So in September, we had a China government banning ICOs. China's been a bad boy in 2017, to be honest. And to add to that, the CEO of JP Morgan, Jamie Dimon, made a statement that Bitcoin is a fraudulent cryptocurrency. Well, it is a fraudulent currency. And that resulted in another sell-off in September. So about 3/4 of September, we were heading downwards. But you know, people don't trust banks that much, so we did have a huge bullish market sentiment throughout the entire period up till December. That was also mainly driven by CME Group launching their BTC futures. There was a huge anticipation of that event because it would mean that the institutional money would be flooding in and pumping the price even further. But what happened is when we got to 16th of December 2017, the price peaked of $19,891.99 on Coinbase, and the bubble burst. Yeah, because the price deviated too much from its mean and it just needed to get back. There had to be some sort of correction. But we entered into a 3-year recession. And we could see the first signs of recovery. It was very good for the beginning of 2020. But you know what happened, the COVID-19. We got a Black Thursday. Basically in February, we got World Health Organization making a statement that COVID-19 became a world pandemic. In fact, President of the United States, Donald Trump, canceled his flight to Europe, as far as I remember. The equity markets panicked, started a huge sell-off, and crypto was no exception. It followed it. So it dropped down hard, and that was a very scary moment for many people. But it also was quite a good opportunity to buy. So then we got China developing their digital yuan back in April. Yeah, throughout April. So it was good news because even though the currency is centralized and controlled by Chinese government, it shows that governments are acknowledging the fact of cryptocurrency, the technology behind cryptocurrency, and are willing to adapt some of these technologies themselves. United Kingdom is not exception, by the way, because there were recent news that they would be focusing on developing digital pound. Then we got a very huge factor called BTC halving. What that means is that there is less emission of bitcoins after the halving, meaning that Bitcoin is becoming more scarce, and that's coming back to what I've said before. It will affect the price in the long run significantly. It actually already affected it. Well, so you could contribute BTC halving to that boom as well. So it's not only these factors, but because of halving, because there's less and less Bitcoins out there on the market, and therefore they're very limited, and it forces the price to go up. We had a summer of decentralized finance development, so it was booming. There were new projects coming in. By decentralized finance, I mean such projects as Uniswap, SushiSwap, 1inch, Polkadot, which came in September, as far as I remember. So yeah, all that sort of stuff that was heavily developing in that period of time. Well, it started to develop. After that, from September till, let's say, February, March-ish, we got the institutional money inflow, and here we get different bunch of people, different bunch of companies investing in crypto, and those are institutional people. I'm talking about Mark Cuban, I'm talking about Michael Saylor, Elon Musk, talking about PayPal, Grayscale, by the way, one of the, I think it's the biggest crypto fund. So all of them just investing heavily in crypto, and you can see what it does. It was pumping the price way up high. Then coming back to 2017-ish, we got a very important psychological level of 20K, because we'd never breached it in 2017, and the psychology of a human being is working towards simpler numbers, and 20,000 US dollars is a simple number. It's a round, simple, it's cute, and you want to get there, you want to breach it. So the psychology behind it was really, really strong. So we just wanted to get there, we wanted to breach it, we wanted to go beyond it, and that's what happened. And there were all the resources for that. So once we breached it, we were going up. We had a slight correction, because you do need to have a correction after you go up like that. Then we bounced off, and we had another sellout due to several factors. The first one, the statement by the US Treasury Secretary, Janet Yellen. She was saying that Bitcoin was inefficient as means of payment and highly speculative. Strong statement, strong sellout. To add to that, we also had a Suez Canal issue that does not really affect crypto directly, but affects equity markets, and crypto is kind of following equities. It's not a one-to-one correlation, no, but some portion of equity movement is referred to crypto. So that's what we get. Then it's bounced off. Then we got Visa partnership with USDC, meaning that Visa would support transactions to be settled and in USDC stablecoin, which is powered by Ethereum. Good news, very good news. Very, again, that just adds up to those factors of institutional money adoption. And now we have a huge sellout because of Turkish ban. Turkish government forbid conducting transactions in cryptocurrency. President Joe Biden, he made a statement 2 days ago about US capital gains tax increase. So we will be going up from 20% to, I think, nearly doubling that. But he never mentioned when it's going to happen. So there was kind of a panic on the market because people were afraid that they won't be able to secure their profits at a cheaper cost, well, tax-wise. Basically, all of this is to show you how important the fundamental analysis is, and I personally treat fundamentals as the reason why the price goes up or down. And technical analysis is how do I get into position, what are my reference points, where is support and resistance. So let's get to let's have a look at the technical analysis now. As I've mentioned before, the BTC market cap accounts for 51% of the entire market capitalization. So, and the BTC dominance chart shows it in percentages. You see it over here. It's quite an important piece of information because it indicates how strong Bitcoin is in relation to the other market and what portion of any price change in Bitcoin can be attributed to the entire market. Back in 2017, obviously, yeah, we got very strong market dominance by BTC because there weren't that many projects back then. The cryptocurrencies were quite limited, and to be honest, they were mainly first generation cryptocurrencies. There wasn't any decentralized finance, there wasn't any DAO as such, there wasn't any NFTs. So we only had Bitcoin and something different, Ethereum. So the picture started changing drastically as new projects started flooding in. But by looking at the end of 2017, when the Bitcoin price started crashing down, we could see that dominance went all the way down to 35%. So what that means is Bitcoin was dropping down so quickly. So the other altcoins, they were also dropping, but not as strong as Bitcoin. So they had to catch up. So once they caught up, Bitcoin started regaining back its dominance. What we're seeing now is the reduction in dominance, which could indicate two things. First one is probably we are the investors are diversifying their portfolios and therefore investing not only in Bitcoin but heavily investing in other projects. Or I would say the other first option would be Ethereum, because it's a very strong project, very solid coin. Or we could say that the sell-off is starting and Bitcoin is losing its value quicker than other altcoins. Okay, let's move on to fear and greed index. You know, Warren Buffett once says, fearful when others are greedy and greedy when others are fearful. Fear and greed index is the implementation of what he said to his investors. It shows the market sentiment. I think about a week ago it was in greed. Now it's turning to fear. Quite a significant change, to be honest. So it has been sitting in greed for, I don't know, for the past couple of months now, maybe even more than that. I think when we started reaching that 20k, it was in extreme greed. Oh yeah, you could see last week it was extreme greed, 76%. Now it's 37. So what it tells me is that we have a shift in sentiment, meaning that the market is actually changing. What I would like to show you is the 50-day moving average on a daily chart. As we can see, it has been acting as support for our entire structure since beginning of October 2020. We can see that it has been bouncing off while getting as close as possible in December, bouncing off due to fundamental factors and etc. We had a sell-off in January. It touched it and it bounced off. It went up again. We got, I think that week is Tesla investing in crypto. Then we went up. We sold out due to fundamentals I've mentioned before. On the 28th of February, we again started getting as close as possible to the 50-day moving average. We bounced off again, went up. Then we sold off again due to Janet Yellen. We touched the 50-day moving average, bounced off again. And over here, it was very important with that sell-off, it was very important to bounce off to carry on with that bullish trend, which we didn't. And you can actually see that the bursts, those bursts, are actually starting getting smaller and smaller and smaller. So look at that. That was a huge boom from December to January. Correction. Another huge boom. Correction. Then booms are started getting smaller and smaller and smaller. And in fact, we didn't have any fuel or any fundamental news to keep us pushing forward, to keep us remaining that support in eyes of 50-day moving average. In fact, we're going all the way down now. That is a very bearish signal. So from our all-time high to the sell-off on the 23rd of April, we got 26% in reduction. So let's have a look at the 4-hour chart. On the 4-hour chart, we can see a death cross of 50-day to 200-day moving average. Again, another signal to sell. I personally, when I see that sort of things, I'm not really interested in getting in any long positions. The last time we had it was in January. But what's different between January and now is that back then we had fundamentals to support us to keep pushing. We had all these institutional investors investing, all these funds investing in crypto. The Middle East was heavily investing in crypto at that time as well. End of January, beginning of February. Dubai was focused on investing in crypto. And we had that support. It helped us to bounce. Mr. Musk helped us to breach that that resistance over here. Then what I want you to show is the monthly chart. Let's skew it down a bit. Okay, you'll see it not only on Binance but pretty much on any other exchange. Our volumes started to get up from October. So we got October, our trading volumes. So we got October, November, which was really booming. It was good because it was heading up to 20K, all the anticipation, all the psychology behind it. Then we got December. It was trading volume wise, it was slightly less than November, but still strong enough. And January, we just had it going. It was a great month in terms of trading volumes. Then the volumes since then started to deteriorate. Yeah, whatever. They started to go down. So what it means that the fundamentals behind it started to wear off. So we had our huge investments in the 1, 2, 3, 4, 5 months, and then it was just too much. We did get the price pushing. We squeezed it to all-time high on the 7th month of trading. But before that, we had 6 consecutive months trading in green. I think that happened to Bitcoin twice in the entire lifespan of the currency. But having it again with current prices, current volumes, it's just too much, especially for now, because there wasn't any correction. We need a healthy correction. That is not healthy. That's just too much. Okay, so coming back to 4-hour, let's talk about our supports, resistances, and etc. Considering all the negativity, all the bearish signals, just to let you know in advance, I'm neither a bull or a bear. I prefer to look at the market realistically, because there was a time when I was a bull in 2017. I paid for it. And I had to wait till I get an opportunity to to get some of my profits out. But yeah, coming back to now, I prefer to look at the market as is. So if there is an opportunity to go long, I go along. If there is agenda behind it, okay. If there is not, I wouldn't get into there, because it's not worth it than sitting in your assets for several years and waiting for them to pay off. Unless you're a long-term investor and you don't care. You can just let your money sit there for 10 years and be happy with it. Yeah, that's a good approach. So yeah, what we have. We did have a solid support at 500, at 50,400 US dollars, which was breached. We did go for a retest, and now we're heading down. What I'm personally expecting is the price to get into that support zone, because that support zone offers a structural support for our entire playout, as you can see. Maintaining that support will allow us to stay in that region. If we fail, we'd be going down to another support level, which was a resistance level for this structure. So we might play for some time over here, but I think we'll just go straight down here. If that's breached, this is our new structure that we're going to be working with. But I do expect that if we go down into these into this buffer zone, we will bounce off probably to this resistance, or going a bit up here, maybe 53,000, something like that. Yeah, maybe higher. And we would be working in that area for now. Well, that's my expectations at the moment. So we shall see how it goes, honestly. As I've mentioned before, there is simply not enough fundamentals behind crypto right now. We don't have enough volumes to push the price even higher. I know people have been calling out 100K, 200K, 400K. Yes, that can happen. I'm not denying that, but not with the structure that we have right now. Not with those fundamentals that we have right now, because right now everything is speaking against us rather than for us. However, I do see this sellout as an opportunity to buy at a cheaper discounted prices, because you would be getting your bounces of supports. You would have an opportunity to buy crypto cheap, not only Bitcoin. I'd personally focus on something else rather than Bitcoin. So that's my vision for today. I'm personally switching towards further sellout. Well, at least we need to maintain that structure in order to be talking about going up, because if that is not maintained, we're heading down here and we might bounce off here. But I don't know. First, I would love to focus on this, let this scenario finish, and see how it plays out before we could start talking about even lower levels of 20 to 30K, because I think that's a bit too soon. But for now, I think that we should carry on sliding down, just enjoying the ride. All right, this is it for today. It was a pleasure. If you did like it, please hit a like button, subscribe, hit that notification bell, and I'll see you in the next one.